A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Switch Markets live trading webinar series. I'm Shane Vernier. Today, we're going to trade the 920 EMA strategy. It's a fantastic way for you to get in on the markets, really on any time frame, with a myriad of different approaches. We can use this as a scalping strategy, an intraday strategy, or a swing trading strategy. I'm going to talk a little bit about the time frames that I like to use. We're going to execute some trades on very compressed time frames. It's really a live time of day, just with that Wall Street open about 30 minutes ago. So we've got a lot going on. I think that it's going to be a good webinar. Remember, these webinars are designed to help the trader. They're not really for me to sit here and just ramble on and on and on. I'm going to show you the mechanics of the 920 EMA strategy. I'm going to give you an idea of how to execute it, and then we're going to show you exactly how to set it up on TradingView and MT5. And if you have any questions, now's the time to ask. We're going to throw it on some markets. We're going to see if we can make a few bucks. But all in all, this is a really good opportunity. If you have any questions at all about the 920, be sure to ask, and I will answer them in short order. We do have some ground to cover though today, which is some basic tutorial instructional stuff, and I'm going to do that as well. And if you've never traded the 920, you're going to find it's pretty easy. It's pretty easy to get set up, and it can give you some pretty good results. We've got great feedback from some of the traders in the How to Trade community that have implemented the 920 on several platforms, time frames and markets, and had good success. So while I'm not going to tell you that it's the holy grail, because it is not. But, it's not too bad of a place to begin. The crossover in and of itself can be a challenging thing to trade. But when you do it in the right way, on the right time frame, in the right markets at the right time, then you've got an opportunity to really succeed. So I want to welcome everybody out there in YouTube land. Good to see you, Kelvin. Welcome. Jason Maxson. Yeah, Jason. Good to see you, Jason. And Joshua Chung. Good to see you, Joshua. Welcome. Like I said, you guys have any questions at all, be sure to ask. And over in the How to Trade community, Tuku. Always a pleasure, Tuku. Welcome back. And all right, let's go ahead and get started here with our 920 EMA crossover live webinar. All right, here we go. 920 EMA. You can find all of this, all these materials over on our YouTube channel. I'm going to go ahead and show you that right now. Just the How to Trade YouTube channel is where I put a lot of content out over the years, a lot of strategy videos over here. I think if you want strategy, probably a pretty good destination for you. So you just go right there to your search bar, hit 920 EMA, and you can see all the videos that we've made. We're going to basically stick to this one, and we're also going to be using our code, our coded 920 EMA in real life. Now, I always get the question, Shane, can I have the code? Can I have the code? I go, absolutely. It's posted in the comments section beneath that AI video there. So just go ahead and give the video a click, go to comments, and I believe it's either right under the pinned comment or the second comment. I posted the code up there for everybody so you guys can have it for free. And we've got a lot of shorts in here. A lot of these are very popular. A lot of these aren't. Some of these, this one right here, the 9 EMA, the 920 is sort of a derivation of the 9 EMA. We're sort of adding the 20 in there for a little bit of confirmation. And if you've watched us trade the 9 EMA, then you sort of know where that's going. This 920, 9 EMA or 920, I like the 9 EMA. The 920 EMA. I'm partial to the 920. If I had to pick one, it would be the 920. So go ahead and check that out. Marson, good to see you. Marson, welcome. All right, everybody. So let's go ahead and get this thing started. So the 920 EMA crossover. What is it? It's crossover strategy. It's very, very, very basic. The entry-exit tools are guidelines are about as easy as it gets. What we're going to do is we're going to buy when the 9 crosses over the 20. We're going to sell when the 9 crosses under the 20. Any time frame, any market, anytime you like. Stop loss above or below the previous swing, high or low. Profit target's going to be a fixed risk versus reward or market structure. Now, all that sounds really super easy. Like, yeah, man, I tuned in to hear, I sell when the 9 crosses underneath the 20. There's more to it than that. I'm going to give you some tips, maybe some pro tips on how to make this thing work for you. All right, so before we go any further, let's go ahead and get this thing set up on TradingView and MT5. Relatively simple and straightforward to do. You just go right here on TradingView. We're going to start there. Indicators. Go down to moving average. Should be right around here, and you'll see there's exponential. Go ahead and click that twice, and you're going to get 2 moving averages, which is what we need. We're going to go up here to settings. I always like my initial EMA. It's what I call my hot. I'm going to make my 9. My 9's always red. So for me, color's a big deal. I want to be able to look right at my chart and be able to see exactly what's happening. So 9, based on the close, no offset, nothing funny, no smoothing, nothing like that. We're just going to go with a very basic EMA right there. Okay, now let's go to our second one. You can see that this is the one that we're going to adjust to a 20. So we've got a 20 right there. The blue, remember, that's sort of our anchor. Let's make these a little thicker so we can see them too as well. But that right there is our anchor point. So when we start talking about, okay, what is the 24? Why don't I just trade the 9? Well, the 20 is sort of an added layer of insurance. It gives us an idea of what the broader trend is doing as opposed to just the 9 EMA. So there you go. You've got it set up in literally 2 seconds. Now, let's go on out to MT5. MT5 is a little more involved, but not too much. Go to Insert, Indicators, Trend. You're going to go to Moving Average. This is a little bit different right there. So we're going to have Exponential. I've already got blue, and we've got our period of 20. Let's go ahead. I do like these lines a little bit thicker, and that's going to be pretty thick right there. So let's go ahead and add it. So there's your 20. Go back up to Insert, Indicators, Trend, Moving Average. Moving Average right here. You're going to go down to a 9. So there's your 9. And once again, I like warm colors or hot colors for my hot. That's my trigger. The 9's our trigger. That's the one we're really watching. We understand where the 20 is, but we want to know where the 9 is. We want it to really stick out. So there you have it. That's a good look at how to set up your 920 EMA on MT5 and TradingView. I know it's really rocket science, isn't it? Okay, we are going to use a confirmation device today, especially on short time frames. Now, I'm getting a little bit ahead of myself, but let's go ahead and do this to get our charts set up exactly the way we want them. Relative Strength Index is a good one for me. I really enjoy it. I think that it's very simple. I've been using it for years as a confirmation device. I don't believe in trading the Relative Strength Index on its own in isolation. I don't believe in that. I think you need it with something else. But you can see right there, there's your RSI, Relative Strength Index. Go ahead and just add it to your chart there on TradingView, and you can see we're leaving it the same. We're going to use a period of 14. These are Wells Wilder Jr.'s inputs, his original settings, 14. The source is the close, and we aren't really doing anything. Just leave it all the same. You don't need to change anything there. All I want is a 70-30 envelope. That's it. I'm not even really too concerned with what the lines look like in there. I want the 70-30 envelope. So that right there, we're over 70, we're looking to sell. And if we're under 30, we're looking to buy. It's that simple. You'll see how that's important when we go to, say, a 1-minute chart or maybe a 30-second chart here in a little bit on the futures markets. Now, we're going to go right here. How do we do that on MT5? Simple. Insert indicators. What are you going to? Oscillators. Oscillators. The RSI is an oscillator. Believe me, I'm not really too sure of how you define an oscillator. I've heard it defined a lot of different ways, but basically what it does is it measures momentum, pricing momentum. That's what an oscillator is. We're trying to figure out if the market's going to follow through or turn. That's the whole idea behind an RSI and the term oscillator. In any case, we're going to go ahead and add that. Remember, just leave it all the same. There's no reason to get fancy with it. And there it goes. To be honest with you, I kind of like the presentation on MT5 a little bit better than TradingView. It's simple. Right there, 70, 30. Above 70, we're looking to sell. Below 30, we're looking to buy. Then that would be a cross under or a crossover. It's pretty simple. Really pretty simple. All right, so let's go ahead and dive in. I don't think we have any questions just yet. I mean, these things are pretty routine at this juncture. So let's go ahead and take a look at one of our coded. The reason why I'm going to use the code here is because it makes it really simple. Now, remember, you can get this code over beneath that video I showed you how to code the 920 strategy on, let's see, using AI. I think it took me all of about 40 minutes to do, but realistically, you can do it. So our gold is going to be our buy signal. All right, purple is going to be our sell. So this is a 4-hour gold chart. This is really a standard issue. This is a standard issue chart that you probably need to be looking at if you're trading gold, especially if you're a swing trader. 4-hour gold can get you into some big moves. 920 crossover. There's your sell right there. We talked about this trade yesterday, actually. There's your sell. Big time market move, and you're still in this thing. We were looking for a buyback just a few hours ago. 16 hours ago? We were looking for a buyback. Didn't get it. Didn't get the buyback. So right now we're sort of in a state of flux when it comes to gold. We are going to do some live trading here, though, and I'm going to take this thing down to short time frames, and we're going to execute. But I did want to start with gold because this was one where we had the nice big break yesterday. And at this point, I was thinking crossover's imminent. We're going to get our crossover and a chance to bid. Well, right this minute, we don't have it just yet. So, all right, let's go ahead and review. Let's take a quick review of our rules, and let's go ahead and place some trades. We're going to go tight time frames, short time frames. If there's a specific market you like, go ahead and ask. But remember, 4 hours. We'll do some swing trades as well. But let's just work short time frames and execute a few of these, show you how you do it. Okay, review our rules. Very simple. I want to make sure that this is automatic for you guys. The buy, the 9 crosses over the 20. That's when we're looking to buy. The red crosses the blue, and we're in there. The sell, the 9 crosses under the 20. All right, that's easy. That's when we're looking to sell the market. Any time frame. We're going to expand really the scope of the time frames. We're going deep today. We're going to get into some really tight phone booth. We're going to be trading inside of a phone booth. Tight time frames. See if we can make a little bit of money. All right, stop loss is going to be above and below the previous swing high and low. Now, this is open for interpretation. Now, this is when I first built this strategy, or we worked this strategy out, and I said, okay, it's time for us to take a look at some hard concrete rules. I really like the swing high and the swing low for stop loss location. I liked it. It depends on the size of your trigger bar. If your trigger bar is big, I really don't have a problem going with a stop loss right beneath the trigger bar, similar to what we've been doing with the 9 EMA on our scalping strategies. I have no problem with just putting the stop loss right beneath that trigger bar. You'll notice why I'm fussing about the stop loss first. We have to know when we're wrong. We have to know when the strategy does not work, and we have to bail. That's it. That's all there is to it, guys. So when I'm looking at above or below the previous swing high or low, all right, that's going to give these trades a little bit more room to work. But if I'm scalping, say 30-second time frame, 15-second, or a 1 minute, then it's okay potentially to play these really, really tight. Why? Because we're going to take a lot of trades. I don't believe in taking position trades based on 1 minute charts. 4-hour charts, probably got a little bit better. I could build a better case to be on those for a few days, but 30 seconds or a minute, we're looking to get in and out. All right, profit target. Now, that's going to be where this is interesting. It's probably going to be a big not determiner, but it's going to be a big factor in your profitability, your success. Your risk versus reward is going to be what makes these trades sing. The bottom line is this. You can trade it as a position trade. You can trade it as a true day trade where you're looking for those 1 to 2s, 1 to 3s, 1 to 4s, 1 to 5 payoffs. You can do that. And we can live the dream, and we can sit here with our slot machine mentality and try to hit big winners. I don't have a problem with it. Just understand that when you do that, you're going to be taking a lot of losses and a lot of consecutive losses. So as long as you're okay with that, the lower winning percentage can still make you profitable. As long as you're okay with that, then you're good to go with a 1 to 2, 1 to 3, 1 to 4, 1 to 5. Now, the other way to do this is market structure. Market structure is the way that most people like it. The ICT, we're in the era of ICT and smart money concepts. So when I build these trades, we could just be looking for maybe a test of a swing high, maybe a test of a value area, maybe a test of a liquidity gap or something like that, or a value gap, fair value gap, I think they call it, or a liquidity sweep, or whatever you want to call any of it. Point is this. The market structure gives you an opportunity to be dynamic with your strategy. Remember yesterday we talked about, being sort of like a quarterback, saying, okay, I'm going to take what the market gives us. Theoretically, that's what market structure provides, as opposed to just applying a fixed risk versus reward on it. You can do it both ways. Biggest thing you got to do is be consistent, and you have to know what you're doing with regards to the market and the time frame you're trading. That's enough talk for me. Let's get on it. Let's get after it. Okay, let's go ahead and start with gold. Gold's a pretty good market to be trading at this time of day. We're looking at about 10:15 Eastern time. So what do we have developed here? Well, basically, we're working a sell signal on the 1 minute chart. You'll notice that we do get a lot of dojis in these situations. When these crossovers occur, you do get a lot of dojis. Notice that this crossover right here, this crossover does not occur until the next bar is fully formed. Don't ever get confused. You've got to see the crossover fully develop. I would rather on a crossover trade you were a little bit late as opposed to being too early. If you're too early with crossovers, you're almost guaranteed to lose. You're going to try to jump the gun and get in. Doesn't work. You've got to wait for that crossover to be firmly developed. So we already missed this trade. Right now we're sort of coming off a little bit. We could place the trade if we wanted to. I'm not going to. We're going to look for something relatively fresh. Let's go down to our let's go to E-mini NASDAQ. Now this is typically a market where you can get just a lot of trades. Line up our paper trader right there to show you that I'm not trading real money. Got in a little bit of trouble for that at one point, but that's okay. Okay, so what are we looking at right here? Now, if I'm on a 1 minute chart, I probably would want a little bit of RSI confirmation. All right, we don't have it. We weren't above 70. We have an opportunity now potentially maybe to get a sell. Now, I'm going to execute this trade. If it does set up our way, and I'm going to do it so we can really have a good look at what exactly a trade looks like. All right, I want to make sure that we show that. Now, E-mini NASDAQ, definitely one of the more active markets in the world. We're going to go with a market order on our crossover. So right now we see the market developing. We don't have our crossover yet. It has not developed yet. It is developing. All right, we're starting to see that bearish price action really bring our 9 down on our 20, and that's extremely important because this is basically the crux of the trade. So if this does develop, we're going to look to sell at market. It's going to be a market order, not a limit order, so we're going right there with the market. I'm going to go ahead and I'm going to rock 2 contracts of E-mini NASDAQ, which is, it's about $12.50 or $13. I can't remember if it's $6.50. I think it's $6.25 a contract. I think we're looking at $12.50 for the trade per tick. Now, one of the things that I'll say is the E-mini NASDAQ futures, this is extremely live market. This is one of those markets that it can really move, and I mean really move. So this is going to be one that we're probably going to be taking a significant risk. And see, look how choppy the market is. This is why you absolutely have got to wait for the crossover. It is non-negotiable. If you try to jump the gun saying, okay, well, it looks like it's going to cross over, I'm just going to go ahead and take the trade, you will lose. The 20 and the 9 are there to work in concert with one another. The 20 is sort of confirming what we're doing. The 9s are hot. Our hot trade, our hot indicator, that's what's going to get us in the market. For right this minute, we're going to ignore RSI, and I'm just going to go ahead and take this trade if we're fortunate enough to get it to set up. Now, one thing I'm going to say about trading short time frames with something like the 920, understand that you're going to be in the market a lot. You're going to make a lot of these trades. If you were trading this E-mini NASDAQ really since the market opened, you would have had, let's see, right there, 1 trade, 1, 2, 3, really choppy in here. We're going to talk about that in just a second. And right here, this would be, your 5th trade of the day. So you'd have 1 winner and 2 losers. Okay, here we go. We're going to dance. Big time price action, big time sell. It looks like we're going to get our crossover. Okay, right now, sell it. Okay, so we sold the market. At market, we're looking for bearish price action if this thing ever gets us filled, right? Okay, there it is. So right there, where's my stop loss going to be and where's my profit target going to be? First thing I want to do is align my stop loss. That was a big signal bar. If we're going to scalp right there, we probably could put it there. If we wanted to take more of a position, we could put it up there above our swing high. Notice how big this leverage is. This leverage is titanic. All right, two contracts, absolutely staggering. So where do I want to put my profit target at? Me, you guys know me, I'm at least a 1-to-1 trader. However, let's go ahead and take a look at the dynamics here and what we could be looking at potentially for a realistic profit target. Now, you'll notice that my target's down here. This is sort of a breakout trade. We're betting that we're going to trade pretty much beneath these lows, this triple bottom that developed right there is during that London session and then the big rally. And then you can see we get in to yesterday evening's lows. So my profit target's going to be almost near the daily low. So if that's the case, and I want to bet it maybe a breakout, possibly betting on a challenge of the daily low, that would be how we would do it market structure wise. If I wanted to get it right up in here as a 1-to-1, we could do something like this as well. Something like that. Now, the first thing I'm going to say is, of course, the leverage is huge. We put 2 contracts of full-size NASDAQ on, not necessarily the best for our risk management. You'll notice that we're playing it pretty tight right here, and it looks like we're going to get wiped out to open up. So a couple of things we want to always stress, 1 to 3% on any given trade. All right, that's the first thing. The second thing is, if you're going to be trading something like an E-mini NASDAQ futures, all right, understand the volatility and the action involved with this trade. I mean, these ranges are huge. We've got 2 lots on, and that's a $2,800 risk using a 1-minute bar. Take it down to a micro contract. Cut that risk down by a factor of 10 or maybe even more. Maybe only go 1 micro contract, and instead of having $2,800 on the trade, which very few people can trade with, you would need, honestly, let's just be honest, to take trades like this and be serious over the long run, you got to have an account of $250,000, a minimum of $100,000, maybe $250,000. And even then, I mean, you could run into 4 or 5 losers in a row that could really hurt you. So what I would say is, take this down to 1 micro. Maybe 1 micro contract's going to have you, maybe you're risking $140. Now, that's doable. So what did we have happen really with our trade? You could see that we had the big sell signal develop there. The last 2 minutes have just been ugly. Now we're starting to drive a little bit to the south, which is where we want to be. Really a beautiful test of these moving averages and a nice area potentially for a secondary short. I don't know that we're going to get there today with our conversation about this strategy. I've been contacted by a lot of traders that say, listen, Shane, don't even enter there. Wait for it to pull back to your moving averages and then hit it. However you can make this thing go and adapt this strategy to your liking, do it. Remember, these are jumping off points. I'm not sitting here selling you a black box system. I'm giving you a way to think about the markets that can get you in and out in a structure, in a very, very structured area, in a structured fashion. So right now we're starting to come off a little bit. I'm about done sticking with this trade. I want to go do some other things so we can look at some executions, potentially on a Forex pair. And I also would love to hit some commodities as well. But you can see right here, starting to come our way a little bit. Very, very sort of a tight range for the day. So do we have an opportunity potentially to run down here at this liquidity sweep that developed at about 6:10 Eastern yesterday? I think so. I think it's very possible. You've got to get through this area first, right around 29,177. But I think it's very possible. Very, very possible. A couple of things this trade has going for it to the south. You're seeing strength out of WTI crude. That negative correlation has been there throughout the past several sessions. And now we're starting to open up the throttle to the downside. We're up about, $1,300, $1,500. We're just going to go ahead and let that one simmer. Once again, we talk a lot about trade management. And what do you do right now? All right, what do you do right now? There's nothing that can prepare you for the last 25% of a trade. There's nothing that can prepare you for it. You've got to be dialed in and ready to go with your trade management. You've got to understand that if I'm trading a system, can I really move my stop losses? Can I mess with the trade? I would say no, you probably can't if it's a true system. Now, this right here, you can see we were just up 1,700, and now we've given a lot of that back. You got to figure it out in your own mind how you're going to trade. For me, this trade honestly was sort of subpar anyways, in my view. We didn't have RSI confirmation, but it is breaking. The market is breaking our way. 23, 24, 2,400, 22. Do we have a chance to give? You show me 28. I mean, right now we're trading 29,144. This market's cratering, and we're out. If it were only that easy, right? Well, this strategy can get you into situations where, it is that easy. Great trade, right? Great trade. I really view it as a high-risk trade. I think that you've got an opportunity potentially to grab maybe a buy because we're going to have RSI confirmation, and potentially we're going to be able to buy this market back if we do get our crossover. So something to think about there. I got some questions here. Packham. Hey, Shane, market dancing around on fake war news from Iran from unconfirmed sources. Well, long conversation for another time. Probably going to talk more about that tomorrow. In my view, the last 36 hours of the news cycle has been complete garbage. Complete garbage. I don't believe there's a deal in the works, and I'm just going to come right out and say it. I'm not going to black pill anybody. I'm not, but we've seen the United States declare victory, Trump declare victory 33 times now. 34 times, saying a deal is near. Listen, the Strait of Hormuz is closed. Crude oil's back up above 100. We're going to have to see something really major for me to get optimistic. And right now, the markets sort of feel that this thing's going to roll into June and July. And if that's the case, the economic fallout's going to be absolutely staggering. I could be wrong, though, and I have been wrong a lot before, but we weren't wrong on that NASDAQ trade, so that was a good one. Tuku, I like the 920 EMA strategy together with key levels. Love it. That's a fantastic way to trade. Key levels are huge. I don't talk enough about them. I talk big round numbers, but we've got all sorts of videos and things that were built on the key levels that I should definitely highlight more. That's for sure. Okay, so we sort of did a little bit of work here on this E-mini NASDAQ. Let's go ahead and go on over to our MT5 and see, okay, right now we've got something good cooking. Now, this is going to be a little bit more difficult because we don't have it coded. We do not have it coded, so we've got to eyeball it and really wait and see exactly what's happening. So this is a 1-hour chart. Of course, we're not going to trade a 1-hour chart, but take a good look at this. This is a good look at Brent crude oil, nice big move, and we've sort of stagnated the last 4 hours, but you do have a crossover brewing. It would not take me much. It would not take me much to get involved to the top side of these oil markets if I got the right crossover. Okay, right there we had a crossover a little bit earlier today. Beautiful trade. Beautiful trade. You got a nice big runner. You're probably already out of that one. And this is Brent. Let's take it down to a 1-minute chart. The game has definitely slowed down a little bit. This area right in here, this is what we call a weave. All right, this is what we call a weave. And this is one of those that you need to be very, very careful with. When you get into that weave formation, that weave mentality, it's easy to win and lose and win and lose and win and lose, especially with the 920 EMA crossover. So to sort of illustrate our weave a little bit better, let's go back to our NQ, our E-mini NASDAQ. This one right here, this is a classic example of a weave. Classic example of a weave. So I made a video. It's over there on the How to Trade. It says 3 times not to trade EMA Crossover Strategies. You need to really check that one out because it can keep you out of trouble. The number one thing we're trying to do by qualifying any price action, especially on these short time frames, RSI clearly can help you stay out of this. But I'll tell you what, guys, if you find yourself trading this 920 in this type of situation, it's really a challenge. It's really a challenge. Look at the frequent crossovers. Anytime you start seeing frequent crossovers, especially on something like a 1 minute, you got to understand you're in chop city. And choppy markets are absolutely the kiss of death. The kiss of death for the 920 or the 5813 or any crossover that you're using. Even the 9 EMA, when you get into flat market conditions, it's tough. Now, this particular session, you can see right here as your opening bell, ding, ding, right? So we break, and you get this initial trade essentially right here. So you've got a couple of options. Number one, if you put your stop loss right here, you got stopped out, right? If you put it beneath the daily low, then you weathered the storm. You probably ignored this sell, potentially, and you got in on a pretty good move. Now, that really does bring you to the next question, the next set of questions about rules. How long do I stay in this? I get this question a lot, especially over on YouTube with all the comments on the videos. Where do I get out at? How do I do this? And I'd say, listen, what I would recommend, highly recommend, is once you get into a trade and set your stop loss, I would let it play out. I would let it play out because let's say right here, okay, let's say you're long. Okay, you're long and then the market comes back down and you're still in. Let's say your loss is down here and then you get this crossover and let's say you decide to exit and then go short, reverse your position, and then you get chopped up. You just made 1 loser, 2 losers, and actually knocked out a winner. I say this. I say take one position, let it pan its out. I don't care how many other indicators develop. Let it work itself out and then go on to the next one. That's the way that I see a crossover. Now, that's more of a position trading strategy, but still, it's not a bad way to stay clean. What I mean is to stay clean. Now, if your stop loss is tight, fine. Take the small loss there. Boom, you took the sell, take the small loss there, and then you're back long, and you're going to get back some of that money you lost. You're going to get back some of that money you lost there too. So if you're going to be tight with this, be consistent. If you're going to be loose with it, be consistent. But if you're putting, stop losses a little bit further down the queue and trying to grab position trades, then you probably can't be cutting them off and reversing. That's my opinion. Okay, let's go ahead and take a look at a few. Let's see if we can find a position trade out there. Let's go dollar yen. Okay, dollar yen 1 minute chart. You can see you're working sort of a sell. I'm not really interested in going to the Forex on a 1 minute chart, even this time of day. I'm not really interested in it. And the reason why is stuff like this. Nice big move. You're losing there. You're buying there. You're losing there. You're probably going to lose there. My personal opinion is these Forex markets are too tight to be trying to trade it on a 1 minute like we just did on that E-mini NASDAQ. There's just not enough movement. And take a look at the RSI. That really bears it out for me. That really confirms what I'm saying. Yeah, you got a little bit of movement there. But right now we're flatlining in the middle, and you'll notice that your price action definitely reflects that. It's flat. So how can we remedy that? Let's say I still want to trade yen. Well, what we could do is just back it off, maybe back it off to a 5 minute chart. See how much cleaner the 5 minute is? You had a beautiful 5 minute trade during the U.S. pre-market, got you in a huge move. That was sort of early on in the London session. What, about 3 hours into the London session? 2 hours into the London session? That's a big move. That's a big move. So right this minute, what could we be potentially looking at? 5 minute chart. We could be looking at a sell. Let's back this off to a 30 minute chart. 30 minute. Beautiful. Boom. That was pre-London Open last night. Great move. Let's go to a 4 hour. Big fan of the 4 hour. 4 hour chart for Forex pairs. No doubt about it. Take a look at that. Buy signal back on the 10th of May. You've been long the whole month and just raking in the cash right there. 157.11 up to 159.21. You'd have to take a look at your swap fees and how much it costs you to carry that trade. But other than just a few negative spikes that have come down, you haven't been able to sustain trade beneath the 9 EMA. Right in here, got a little bit choppy, and now we're pressing higher. Pretty good stuff. Pretty good stuff from the dollar yen. So I don't see really any position trades there. Let's go here. Great Britain pound USD. Interesting. Okay, so that right there was your buy, and we talked about this one, potentially taking this one yesterday. You'll notice that on this position trade, You're not out of it yet, but it doesn't look good. Right there, your stop loss has got to be beneath the swing low. You could have put it right up there, very tight. You'd already be out. I say on a four-hour chart, I would be looking to take those position trades and let these go as true swing trades. So you're looking down here. Your low is 133.75. Your entry point's going to be somewhere right around 134.41. It's only 70 pips. It's not the end of the world, especially if you design your leverage properly. I would let this one play out. You still got another 25 pips to work with. You're back down to about 134, which is a natural area of support. I would go ahead and just let this one play out. Long side position. Not a bad trade. Not a great trade because it's going against us. I mean, we're down 40 pips, but still there's time left in this week and early next week where potentially we could get this move that we're looking for back up in to this real weak chain. So that's not horrible. It's not a horrible trade. And remember, your risk is baked in. So with no big news events really coming out besides the Iran war, you got an opportunity here maybe to let this one bleed a little bit. No problem at all with that. All right, let's go ahead and see if we can find one of these things live. How about the dollar CAD? What's the dollar CAD doing? All right, we're going to have to, we'll be reviewing this one tomorrow for sure. This one's testing our trade idea right up around 138. This is exactly what we wanted to see. That high was 78, so now we've pressed a little bit higher. Don't be surprised if we get a retracement there. I'm just thinking out loud. But that right there's your buy back on the 6th of May. Been holding that thing all through May, and it's been fantastic. Let's go Kiwi. How about the Kiwi? What do we have setting up here? Potentially a buy signal? 4-hour chart. Really love the 4-hour for the Forex. No question about it. Flat market here for about the past 16 hours or so. But if you do get that crossover, and it's brewing, this crossover right here could get you into a pretty darn good trade. A pretty darn good long. I think I probably would be looking to take that trade just because it's going to have a lot going for it if it does develop. Now, is it going to develop? That I don't know. But let's say you get your entry somewhere up in this value area. You'd be looking to do something like that. You're going to have to stop yourself out beneath that swing low, which isn't really the end of the world. You know, it depends on where your entry is. But 158.66, maybe down there, 158.11. You're looking at what, a 55 pip risk, something like that. You just be drawing this right up here, maybe even 1.5 to 1. Even if you wanted to play market structure and take a trade for, maybe a week. Really does depend on your swap fee and what that's going to cost you. But still, if you do get that setup, it's not a bad one. You've got the double bottom here on the 4-hour. Nice big sell-off there. If you caught that short, that's good stuff. But this right here could be a really nice trade, especially as it pertains to potentially the swing, the swing trading strategy. That's for sure. Let's go ahead and show you maybe a nifty trick. Say, okay, Shane, maybe I want to take this swing trade on this Kiwi. How do I do it? And I said, well, the first thing you're going to have to do is you're going to have to know what your swap fees are. That's going to be absolutely important. You head on over to switchmarkets.com. You go over to your Forex swap calculator. That's what you're going to go ahead and give that a click. We're going to go ahead and go NZD, USD. That's the Kiwi. Our deposit currency, I'm going to work it in US dollars. My lot size, let's say I'm a little bit of a player. Let's say I want to put 15 lots on it. Number of nights, let's say I want to hold 7 nights. What's my swap fee? Okay, the swap long, if on this buy, it's going to cost me $319 to do that. That's what it's going to cost me for 7 nights. On my swap short, it's going to pay me $147. So if I'm looking at my swap calculator, I'm saying, okay, it's going to cost me $319. Maybe that type of trade isn't even viable. Maybe I can't hold it. So if I'm looking at 15 lots, maybe let's take this down to 5 lots and see exactly what we're looking at here. Okay, that's more reasonable. It's only about $106. So if I'm going to trade 5 lots, and let's say I'm going to hold it for a maximum of 7 nights, it's going to cost me $100 to do it. Let's go back over here and I'd say, okay, what do we have here? Well, I mean, what do we have? Is it going to be worth my time? Well, you can see what the size that we're putting on. We're looking for an amount. We're risking about $750, looking to make $1,400. So essentially, we're going to be risking about $850, something like that. Let's go ahead and dial in our position size just perfect here. So your count size is 1,000. The risk is, this works different, of course. In any case, as a percentage, what you would have to do is figure out this lot size, right? So as soon as you get this lot size going, the exact lot size this would be, I don't know what it is off the top of my head, but you would take that lot size, go back over and put it in that lot size calculator, find out how much it's going to cost you and then you'll have an opportunity potentially to get something done here. Let's go ahead and look at MT5. MT5 might help us out here with this regard. Let's see, file. Let's go view. Let's pull up our market watch here real quick. Market watch, I want the NZD USD. Go to your plus sign, NZD USD, New Zealand dollar. Okay, let's go ahead and add it. Add it to the thing. Drag and drop functionality. Good stuff. Okay, we want a 4-hour chart here. Very good. Very strong time frame to be trading Forex. So if I want to go ahead and take this trade, let's go ahead and just execute it for the sake of argument. I just bought one lot here. All right, one lot. We're going to go ahead. We're going to put our stop loss beneath this, which is going to be 478. Let's go ahead and run this up to the top of market structure, which if we get it, it's going to be a payoff of what, about 800, something like that? $802. So we're risking our stop loss here. We're risking, and we haven't got the crossover just yet. Let's assume that we have. We're risking 500, I believe. These things are always, MT5 is always problematic like this, getting that bubble to pop up. Okay, we're risking 478, and we're looking to make about 800, all right? So 800. So if 800 is going to be our profit, we've got to get back into, let's see, where is my... If we're looking to make 800 on this trade, we're right back over here. We go tools. We're going right here to our swap calculator. NZD USD once again. NZD USD. Deposit currency is going to be US dollars. Lot size, we only put a one lot on, a one lot buy. Number of nights. Now here's where it gets tricky. I would always figure this out as a maximum of nights that I was going to give it. That's going to give you a ballpark. So let's say this is going to be a potential swing trade. I'll give it a maximum of 7 nights. So let's go ahead and put 7 nights on it. Let's go ahead and calculate it. Okay, that swap long on one lot is going to cost me $21. $21. So let's go back on over to our MT5. You'll see that we went ahead. We're long one. Let's go ahead and pull up our toolbox. Right there, we bought one lot. All right, we're looking to catch a pretty good move and get our if it ever tells us, $802. So we're looking for a pretty darn good move to catch a pretty good move. So it's $21 of 800. Is that a big deal? No, that trade's viable. So you may be able to execute that trade and feel pretty good about it. That's for sure. So that's how you start building these trades. Taking into account everything. It's your swap fees, all sorts of stuff. All right, let's go ahead and see if we can find one more trade. Let's go to the XAU USD. Always a fan favorite. Let's go right here to a 1-minute chart and see if we can get something cooking. All right, so right there would have been our buy. I'm going to go ahead and send one long here. I'm going to send one long. We'll talk a little bit about why here in a second. Order, market. All right, buy it. Okay, we're officially long this market. Now, 1-minute chart, right there was your buy. Now, if you put your stop loss right beneath there, you withstood the draw against you. Buying up here, probably a non-starter. We shouldn't have been doing that, but still, you have a buy signal, so you should have been long down in here. You probably could have still been in this trade. Take profit, I don't know. Let's go ahead and shoot for something like that. Stop loss right beneath that double bottom. I don't recommend entries like that because they're really not good enough. You need to be long down here or maybe on this pullback, buying up here. You're going to run into that sometimes, especially if you're using market orders with spot gold just because the spreads are so big. You're always going to probably get the worst of your fills, but still, this trade does seem to want to play ball with us. So we're looking for about 388 to the top side. Looking for a quick run up to about 45.13. Not bad. We're getting a little bit of love there. The profit target's one thing. The stop loss is another. So where we want to be, right beneath that double bottom. So 456. I highly recommend maybe nothing short of a 1-to-1. I mean, that would be my base. That would pretty much be as low as I would go with the risk versus reward. Now, if I wanted to play a market structure like we did a little bit earlier on that NASDAQ trade, we could do something like this. We could look for the top maybe of this bearish liquidity sweep, the top of market structure, and maybe shoot for like a 1-to-2 there. Once again, if you have a very volatile market or an incredibly volatile market, you can do things like that. But remember that your timing is going to be everything. So this gold trade, we're playing it tight enough to where it has to go up, and it has to go up right now, or else we're going to get stopped out and lose. So understand that when the timing mechanism becomes a big factor in this, it has to go, and it has to go right now. That means we don't have much margin for error. So when we start shooting for 1-to-2s, 1-to-3s, 1-to-4s, and it has to happen right now, it really, really detracts from our ability to stack up a good winning percentage. We really are putting ourselves sort of behind the 8 ball, as opposed to maybe taking a percentage, or a bigger risk, maybe around that swing low down there and looking for a bigger gain. That gives us a better chance just because we sort of are taking a day trade. Now, this is a scalp. This is a 1 minute chart, very, very compressed time frame. The only thing we have really going for us right now is that the U.S. dollar is it's sort of fading off a session high, so that may help us. But also, you do have a very good time of day to be doing this, but probably only for the next 25 or 30 minutes. Once that 11 o'clock Eastern rolls around, then we start to see the end of the London session, and gold can get very quiet very quickly, and that's just pretty much death when you're trading at 920. That's for sure. So definitely something you want to look at here. Now the market's going against us, going for us. We could be in this one another 5 seconds, or we could be in it for another hour. It just really depends on what the market does. For me, I find putting on trades like this challenging. Very, very challenging. I would much rather be doing something on a 5-minute chart with less leverage, maybe a 30-minute, and definitely the 4-hour. Just dial your leverage down and trade the 4-hour, and you should be in pretty good shape. In any case, that gold trade sort of looks like a dud. Let's see. Got a question here from Marson. Marson, good to see you. Hi, Shane. What do you think about taking trades only in the direction of the higher time frame trend? For example, only taking longs on the 5 and 15-minute charts when the 30-minute or 1-hour trend is up. I love it. I absolutely love it. I love it if you have a market bias, if you have a bullish bias, and then you're looking for longs. Absolutely, 100%. So the idea there would be that you're taking a bias, you're taking multiple time frames, you're building a trend side or a long side or a short side bias, and then you're going to execute the trades on a shorter time frame in conjunction with the longer time frame bias. I love that. I mean, that is exactly what I'm looking to do. See, we just got nailed. We got nailed because it's Chop City here in the gold market. So in this instance, we're only down about 0.87%. Not really a huge trend day for gold, but we got wiped out after a trade that was profitable just a little bit. So that right there is a good illustration of why when you get into sort of these choppy conditions, it can be really really tough to hit those 1 to 2s, 1 to 3s, 1 to 4s, especially using short time frames. So something to think about there if you are interested in trading these. So sort of to Marston's point, if I was going to be trading, let's say I want to trade gold today, and I'm looking at the daily. Not real great. Frequent crossovers. That was a great move there. That was a failed bullish breakout there. This bearish move, I guess still technically is valid, but really that weave formation is in effect. You've got a couple of crossovers there. You also saw that really these two touch but not cross. That tells me that, when that shaded area between the EMAs gets tight, then you really have to be careful with what you're doing because that means the market is flattening out. So to Marston's point, let's say I wanted to trade this thing and I said, okay, on the daily, what's going on like right in here? Right in here, you've got a downtrend. No question about it. That was back in March, the war, all the money was going into bonds and T-bills and things, and you've got a downtrend in gold. You've got a daily downtrend. So an interesting if you were really serious about launching an intellectual deep back test of how this strategy performs and you wanted to get serious about it and do some next level thinking, you'd say, how does this strategy perform on those days? Clearly a trend day, clearly a trend 3 days. And honestly, you probably would have known that you were trending on the second day when you broke beneath the first day's low and kept coming down. So I would say, how did all the sells look from the 18th of March down there to the 23rd of March? How did they look? Even though, you had a bounce back, you probably could have bought a bottom in there, but you won't know that till after the fact. But this right in here, probably could have known that. So it sort of speaks to, do we have anything moving today at all? And we'll run through a quick one. Okay, Bitcoin, good example. All right, Bitcoin, what do we got? We're down about 0.73%. Let's go to a 30-minute chart on Bitcoin and see if there's any market structure worth the salt. Okay, sort of trending down here. Started up here right around 78. Now we're sort of testing the bottom at 76. So there's been a little bit of movement here. So the question would be, 30-minute chart, giving us a bit of a downtrend. I got a downside bias, right? Let's say we're falling away a little bit. Let's go to a 1-minute chart now and see how the sells performed given this environment. Does it work? I don't know. Maybe it does, maybe it doesn't. How many trades you can get, number one? Only looking at sells. There was a sell. Ignoring the buys, there's another sell. You can barely see it, but there's another sell. Didn't get the buy crossover there. You're still in that sell. We're ignoring buys. There's another sell. We're ignoring buys. There's another sell. No buy. There's another sell. Now we're working a sell. It's a great idea, Marcin. That's next level thinking. That's what makes these strategies hum. That's the joy of research right there, is when you say, okay, how about I identify a trend? How about I identify an intraday trend or maybe a macro trend? Trade it that way. Trade my short time frames that way. Let's do it again. Let's see if we can do it again. I'm interested now. My interest is peaked. Okay, we're going back to that daily gold chart right here. I want to know exactly what happened on these 3 days. What's a viable time frame? 30-minute chart? We could go with a 4-hour chart. My hunch says a 4-hour chart probably caught the whole move. Let's go to a 30-minute. There's our 3-day window. Okay, we're going to have to ignore probably this one up here. Well, maybe not. Sort of flat line. You probably ignore that first one just because we already know. So that one right there, let's throw that one out. Did we get any other sells? Okay, there's your buy. Ignoring the buy, there's your sell. You take a bit of a draw, stop loss here. You got in on the big move. Ignoring the buy. Taking the sell. Did the sell get stopped? Stop would have been right there. There's the sell. Okay, you'd have lost right there. You'd have lost that one, and then this sell would have got chopped up. But look, we're out of our trend. We can already see that the market's rebounded in a big, big way. So the cherry trade here, Marcin, and that 3-day trend, okay, we're not going to get the first one, probably, because the market's flat. It hasn't broken yet. It's not trending, but right now it is trending. Down in here, it's trending, no question. So what you'd love to see is the crossover, the failure, and then going against it. So something like this, there it is. This is the setup. There's your buy. Buy gets a little bit of love, and then there's your sell. And the party is over, and the trend continues, and you go down to the store and you buy yourself a race car. That's good stuff. That's next level stuff. So if you're interested in tweaking these strategies and figuring out exactly how to make them hum and make them work, that's trading. That's trading. If you can, I've always said this, guys, if you can get good at recognizing a trend or a flat market, you can make it work. You can make trading really hum for you. So that was a really good observation, and you can see that there may really be something to that. That's for sure. All right, everybody. Let's see. I got way behind. Sorry, Dave. I missed. I had the other live chat open on these live webinars where we're only going on Switch. I've got like 3 chats or 2 chats, and oftentimes I get behind. Let me have a look here. Dave's Apple. What is the RSI? It was like 20 minutes ago. Sorry, Dave. What does the RSI need to be to enter these trades? Okay, the RSI, leave all the settings the same. Very simple. RSI platform, a period of 14. You just add the factory. What we're looking for is the RSI to be above 70, and then we're looking for the 9 to cross under the 20. That's a sell. And then you're looking for the market to be beneath 30 and the 9 to cross over the 20. That's a buy. That's a buy. 70-30. You can adjust the bands if you want. I go with 70-30 for sure. That's for sure. All right, everybody. I'm going to go ahead and sign off for today. We've gone on long enough on the 920 EMA Crossover Strategy. I hope you enjoyed it. Pretty good trade. I really, something like this on short time frames, you need the most volatile market in the most active time you can get. And that typically is going to be something like your NASDAQ, E-mini NASDAQ. You're going to get a lot of action there. Probably WTI crude oil this time of day. You're going to get a lot of trades. The Forex, don't be so hasty to go to a 1-minute or a 30-second chart trade in Forex pairs. I really discourage that. This time of day, London-US overlap, I wouldn't go any lower than like a 5-minute. I really wouldn't. And even that's low. I'd probably be rocking a 30-minute. In the 4-hour time frame for gold and the Forex pairs, that's my favorite. That's my favorite. That's going to get you into some good position trades that you can have a good opportunity with. And we're watching one of those potentially set up in the Kiwis. So, all right, everybody, I want to thank you for joining me today. It's always fun doing these webinars. Hope you learned something. If you have any question at all, head on over to the howtotrade.com. You can get your free, sign up for your free account, send me a private message, reach out, say hi. I'm more than happy to get back to you. If nothing else, if you don't have any other questions, I'm going to go ahead and take off right now. All right, guys, we'll be back tomorrow with the final live stream for a few weeks, it looks like. I'll have the next schedule. I believe our next live stream after tomorrow is going to be like June 3rd, maybe June 4th. I don't know. I have to look at it. But that's going to be the case. As always, have a fantastic trading session. Pretty good stuff there, though. The 920, you start tweaking it. You start working with it. The multi-timeframe stuff is... you can see what's happening there. You just got to have the patience to execute. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders